Europe is also closely watching. Experts say the decision may not have a drastic impact on the region. Jack Barton explores from Brussels.
In more stable times, a small move in the US Federal Reserve's benchmark interest rate would not raise eyebrows in Europe. But the EU's economy remains stagnant, with economic growth and inflation hovering just above zero. The euro is already trading at a near 10-year low against the dollar. But many analysts don't expect another immediate drop if the Fed raises its key rate.
The impact will not be so huge because we have already seen a strong depreciation of the euro in 2015 in expectation of what the Fed is going to decide.
What really matters will be the forward guidance given by the Fed's chairwoman, Janet Yellen.
The market is expecting a very gradual increase of interest rate next year. How Mrs. Yellen will tell this to the market, this will be important.
If the Fed hints at further rate hikes next year, the euro will likely tumble further.
Parity is probably a likely scenario, given that nobody is really interested in keeping the euro up. I mean, neither domestically, with the strong interest of Germany for export, but at the same time, we don't see any keen interest from the US side to keep the euro up.
The cost of dollar-denominated imports like oil and gas would rise, but they're now at rock-bottom prices anyhow. A lower euro could boost exports for some countries like Germany, but not everyone is convinced.
Most of the recent depreciations that we've seen, yen as well as the euro, had had very little, if not negative, impact on trade balance.
And one real concern for Europe is that a rate hike by the Federal Reserve could hit hard at emerging markets, which account for a quarter of the EU's foreign trade. Jack Barton, CCTV, Brussels.